Welcome to the What Bitcoin Did podcast.
Hi there, how is everyone? Welcome to the What Bitcoin Did podcast, where you get to hear from the best minds in Bitcoin and crypto. I'm your host, Peter McCormack, and this week I have an interview with Francis Pouliot, CEO of Satoshi Portal. But before I talk about that, I have a message from my show sponsors. Firstly, I want to tell you about my regular sponsor, BlockFi. And I also want to say a big thanks to them for becoming a regular long-term sponsor. It really helps the show. So, would you like to use your crypto without selling it? Whether you're paying off student loans, buying a house, or starting a business, BlockFi helps crypto investors use their Bitcoin, Ether, and Litecoin without selling it. Backed by Mike Novogratz, BlockFi is the leading crypto to USD lender in the US, servicing over 45 states with interest rates as low as 7.9%. And they have a special offer for the listeners of my podcast. If you sign up at blockfi.com/whatbitcoindid, you will get $25 in free crypto added to customer collateral loans for under $10,000, or $50 in free crypto added to customer collateral loans over $10,000, and applying takes less than 2 minutes. Next up, I want to tell you about Make It Rain. If you need help with your marketing of your company or your project, you won't do better than these guys. They are the best in the business of SEO, paid, predictive, and social media. And I'm not just saying this, I've worked with the guys, I know them well. They're based in LA, but they service clients worldwide. And they have a special offer for listeners of this podcast. If you mention What Bitcoin Did when reaching out to them, they will provide you with a free SEO audit. So what do you got to lose? Find out more, head over to makeitrainusa.com. So, on to the interview with Francis. And wow, he drops the fire on tokens. Look, the backdrop to this is after his debate with Brendan Ike regarding Brave and the BAT token on Twitter, I wanted to get them both on the show. And I've managed to do it in the same week, which is pretty cool. Tuesday we had Brendan. If you haven't heard that, please check it out in the show notes. There's a link there. And today we have Francis. He discusses the network effect of money, why he thinks tokens will go to zero, and why he thinks BAT is a scam. And we also touch on Coinbase, talk about some of the things they're up to that maybe aren't in the best interest of Bitcoin. If you want to support the show, please head over to my website. There's a section on that at www.whatbitcoindid.com. That'll tell you everything you can do to help. So let's move on to the interview. I hope you enjoy it. If you've got any questions, you can always reach out to me on hello@whatbitcoindid.com and I will respond pretty much to anyone. Okay, enjoy the interview. Hi, Francis.
Hello, Peter. How are you?
I'm good. Nice to meet you finally. I've seen a lot of your stuff on Twitter, so it's nice to finally talk to you. I don't know your background. I don't always do origin stories, but I don't know your full background. I'm aware of some things, like didn't you create the first exchange in Canada for Bitcoin?
Okay, so my background is not as a tech person. I was a economist and policy analyst working for a free market research institute in Montreal. So I had a master's degree in policy analysis, and I was kind of having a academic career, writing reports, ghostwriting for politicians, and I was very involved in the libertarian free market Austrian economic movements. So at my research institute in 2013. I became friends with some Bitcoin early adopters, like as a libertarian in the circles that we were involved with and in some initiatives that we were doing. So we convinced my research institute to publish some reports on Bitcoin. And our institute is kind of like, imagine like a Cato Institute type Institute of Economic Affairs in the UK, which I also was an intern at. It's kind of an equivalent. So it's a pretty well-known institute, and starting to write that research report on Bitcoin, I really fell like in the rabbit hole. And once I was done, the Bitcoin early adopters that I was friends with, they had launched something called the Bitcoin Embassy, which was imagine a mix between like Coin Center, so a advocacy group that meant to do public affairs, public relations, showing up at the parliamentary hearings, that kind of stuff. But also it was a mix of like an Apple store, because we had it was a 4-story building downtown Montreal. So we had like a big bay window, and it's kind of a place that would be like a Zara or H&M or like clothing store, right? Like downtown. So people would just like walk in, and we had a desk, and like people would just come up and ask questions about Bitcoin. Eventually, the number one question people would ask is like, can I buy some here? So at the beginning, it was like, no, we're like activists. We're running a co-working space. We have some like offices upstairs with some startups. Like, you can't buy Bitcoins here. And then people were like, oh, well, I'll give you 5% more. And no. And then, oh, I'll give you 10% more. And like, okay, let me wire some money on the exchange and let's see what we can do. So eventually we opened the currency exchange in the Bitcoin Embassy. We called it Satoshi Counter. And it was a pretty big exchange at the time. So that was like late 2014. So I mean, it was a kind of a unique setup, and this really allowed us to have, that was unique, is like this first-hand contact, like face-to-face with the underlying Bitcoin users. So I have a very good idea of what the elusive like Bitcoin user that's not on Twitter. I've met a lot of iterations of him, the average Bitcoin user. And this is one of the reasons why when the scaling debate happened, I decided to kind of join in, because everybody was talking about Bitcoin users. And I was like, well, a lot of you guys in Silicon Valley, when you're designing your apps, like Bitcoin users are not the other people at the cocktail party, right? There's like millions of other people out there. And when you're talking about Bitcoin users, like, I don't really think you know what you're talking about. So yeah, we built this physical exchange. That was a lot of fun. And for the backstory, a lot of people, they follow me on Twitter and they see I'm like very, very vocal against altcoins, toxic. Some people think obsessed. Some other people say, well, yeah, sure. I mean, I try to think as little as possible about altcoins. But like when you have a physical currency exchange counter, all the people that are in trouble come to you instantly, right? So that goes from ransomware victims, that goes from people who like lose their Bitcoins, but that also covers all the people that get scammed by altcoins, right? So, I mean, that's one of the reasons I had this Twitter debate, if you want to call it a debate, with the founder of BAT, Brendan Ehrlich or something. And then he's talking about, it's like he doesn't even grasp the idea that someone at the end like bought BAT, like a physical human bought it and is holding it and is like investing his life savings. Because I saw people crying. They lost their life savings because of shitcoins and because of scams and because of these pumping up fraud. I have seen kids withdraw money from their grandmother's accounts to like invest in shitcoins, to lose their family's wealth. I have seen this stuff, a lot of it, right? And these people come crying and like their lives are like destroyed. There's collateral damage. Like these things are real. Like if you look at the market cap chart of all the altcoins, it went from 500 billion to I don't know how much it is now, maybe 200 or something. It's not to say that $300 billion were evaporated. That's not how real economics works. These are just numbers on a chart. But a lot of people lost a lot of money. Right. So that was something that the counter proximity with people really gave me. It's like this consciousness that these are not data entries on your balance sheet. These are humans at the end of the day. And then, starting from there, I took over a company called Bills, which one of my friends at the Bitcoin Embassy had started, and he wasn't able to continue doing it. He wanted to move to another country. So I bought this company, which is Canada's first payment processor and still the largest payment processor in Canada. So we have these, our clients are Bitcoin holders and users that get paid in Bitcoin or have Bitcoins, and they'll pay their bills with Bitcoin, or they'll send money to other people or pay invoices, or like they'll pay their landlord with Bitcoin. So we got this user base. We only accept Bitcoin on our app. And we also run another web service called Bitcoin Outlet, which is kind of like Coinbase. It's like you link your bank account, you buy Bitcoin and they're sent directly to your own Bitcoin wallet. So my company, we operate on-ramp and off-ramp apps. We started with physical currency exchange and ATMs. We stopped doing that in 2015 because it was unscalable, and the cash business is not fun. It's a lot of hustling and hassling. So we decided to build apps that are scalable, and that's what we still do today. So my company's Satoshi portal is like Bills and Bitcoin Outlet are like apps and brands. And we also build another software project, which is called CipherNode. CipherNode is an open source project that aims to allow developers and power users to interact with Bitcoin really easily. So think of it like a middleware between the Bitcoin core, Bitcoin protocol, Lightning, all these core tech, and like some user-friendly applications or whatever services. We are building something which is like an open source blockchain.info or open source BitPay backend or something like that, if you want to think of it like this if you're not technical. So there's a bunch of startups out there, specifically blockchain.info, Coinbase, BitPay, BlockCypher, BitGo, and they run nodes for you. They run wallets for you as an app or as a service. And like you connect to their service. It's like a licensing model. You pay per use or something. And this means that those startups are basically telling you let's say that I'm running Bills, like I'm running a payment app, and I want to know that I received Bitcoin payments from a user. using Bitcoin Core is like not really easy. So most people, they just connect to blockchain.info, and blockchain.info tells them they received Bitcoins. So what we did is like we open sourced blockchain.info's backend so that people run it themselves. So it's kind of like they're doing the same thing as they used to be doing, connecting to blockchain for Coinbase, but they're connecting to their own self-hosted backend, kind of like what Nicolas Dorier did with the BTC Pay server. So sorry for the long intro, but that's what I do.
So that intro is really interesting for a couple of reasons. My podcast goes out twice a week. It goes out on a Tuesday, on a Friday. So one episode came out today. I'm going to give you one guess who the guest was.
Obviously, Brendan, right?
Brendan was on the podcast today. So that was very interesting. I've had a lot of Bitcoiners on the show. We've talked a lot about Bitcoin, but I have a number of questions for you around tokens because I think that will be highly educational for people. But I do want to stick with Bitcoin just to begin with. I'm going to quote you here because I found this tweet really interesting. Bitcoin is the wolf born in northern tundra, strengthening and migrating south as it looks for bigger prey. Where did that come from?
That came from, I think I got the idea for that tweet from a tweet by Dan Held. And it was something like, I think I saw Vortex retweet it, and it was like, Bitcoin is the apex predator of money. And then, so kind of the backdrop is like, I've been analyzing Bitcoin from a systems theory point of view for like a long time. I'm a big fan of Nassim Taleb. I was always a big fan of emergent order and Austrian economics, and like trying to conceive Bitcoin as this organic thing and trying to conceive monies as competing in a winner takes all game. So one of like my fundamental ideas behind economics is, in terms of currency, I really see them as winner takes all protocols because of the network effects. And I'm trying to explain this to a lot of people that are, for example, they'll say, oh, they'll look at a token, they'll not see that token is competing with Bitcoin. Forget the product. The token is not the product. The token is money. The token is money that was created to pay for something, and it's competing with Bitcoin. So yeah, the way that I used to conceive it, I started to talk about languages so people could see why do people speak certain languages and the way that languages evolve. For example, one of the analogies is if you put like 1,000 people from different countries on a spacecraft that's going to another planet, and they're going to get there like 5 generations later, like everybody's going to speak English in like 3 generations. Nobody's going to speak their original languages after a few generations. They're going to speak their local kind of gibberish. And it's just because the cost of going from one network to another, the risk of holding a currency versus another is so huge. Like these network effects are massively gravitational. Like people really gravitate towards it. One of my favorite quotes is from Paul Stortz, which is money is the strongest network effect, because if you're on the wrong network, you die eventually, right? If you're on the wrong network effect of money and it becomes worthless, you can't eat anymore. So you have a like really strong, it's not like switching from Facebook to MySpace. Like these are different levels. The stakes are higher in there. So I also believe in a kind of via negativa view of innovation and evolution. This is a concept that you can find in Nassim Taleb's books also. Like Nassim Taleb is my biggest influence. I try to apply his ethics in real life and his analysis to Bitcoin. So if you want to understand like where all these things are coming from, most of it is from Nassim Taleb.
Hence why you often talk about skin in the game with Bitcoin.
Right. Yeah, exactly. Skin in the game being a practical, ethical method for you to navigate this immoral industry, right? Which is it's easy to become unethical in the crypto industry. It's the peer pressure of being unethical is not there. Like being unethical is rewarded and it's celebrated under buzzwords of innovation and building products. Via negativa means humanity needed to discover what was the best form of money. Hence, multiple monies coexisting at the same time is always good. There needs to be a process of selection. It's trial and error. People are like confused as to why gold was spontaneously adopted as currency on different parts of the world at the same time. And, all sorts of theories like aliens, whatever. But really what happened is that humans kind of evolved at the same time. We started civilization pretty much at the same time everywhere. And then over time, like everybody tried different forms of money. And it's very simple. Like the people that didn't have the best forms of money did not keep their wealth over time, were not able to do commerce, were not able to thrive. They eventually disappeared. Their way of life eventually disappeared in favor of those who were able to keep their wealth over time and thrive and all these things. It's that the other monies died off and gold was what was left.
Have you seen the Jeremy Saulnier film, Hold the Dark?
I have not.
I should send you that because that's about wolves. It's just come out recently. I'll send you that through.
So the wolf, it could have been anything, but the wolf was the idea of the apex, right? And it's the idea that you can have all sorts of creatures like currencies, right? And if there's no competition, then you're just looking at them kind of passively, analytically. You're judging currencies on their specs, but really what you need to think of is these things one day. And one of the major reasons why people have a hard time understanding currency competition and the possibility of one apex currency dominating, which is Bitcoin maximalism, right? So Bitcoin maximalism is not Bitcoin maximalism. It's single currency maximalism with a strong bet on Bitcoin as being the outcome. And people are like, well, look at the world. There's 200 currencies. If your theory is obviously incorrect because there's like hundreds of currencies out there. So we live in a multi-currency world. You're the one who has an incredible claim. Well, what people need to think about is you cannot restrict markets anymore. You used to be able, the reason why you have these currencies that exist is that there's not a free market in currency. There's like 170 issuers of the currency. They have legal tender within their jurisdiction. There are laws which force people to accept it for debts and for services. Like in Canada, we have the Currency Act. You are illegal not to accept Canadian dollars for goods and services. So there's a restriction on the competition, right? So governments can't prevent their population from moving into Bitcoin. So once you have this thing that just breaks the barriers to entry in the free market, then you have a free market of currencies de facto because people can move into Bitcoin. Exchanges can be censored. So if you break down the barriers, it's kind of like you're releasing the wolf, right? In this ecosystem, the on-paper specs don't matter anymore. Like it's a fight to the death, and there's not a lot of room for more than one winner in this game.
Canada's quite pro-crypto, right?
Yeah. So Canada is like a lot of people have this question have been asked to me by everyone for years and years. Is like, why is Canada so pro-Bitcoin? Why is Bitcoin a Canadian thing? And if you go to a Bitcoin conference and you ask people where they're from, they might sound and look American, but there's a bunch of Canadians in there.
You're a progressive country, though, in almost every sense, and you have a great prime minister, Justin Trudeau. Is that how you say his name?
I'm not a fan of Justin.
I guess to the outside world, though, he does come across as, like, compared to all the other leaders of the world, he comes across as probably one of the best.
Yeah, well, Canada is like a feel-good country, but underlying, Canada's a massively socialist government, right? Massively socialist state, particularly in Quebec, but also the rest of Canada. It's highest rates of taxation. You can think of Canada like kind of like a Scandinavian type a little bit, where people are like proud to pay taxes and everything. But it's not because it's feel good that we're part of the Five Eyes. We have strong military, that kind of stuff. But regarding crypto regulations, it has something to do, I think, with Canada's parliamentary system, but it's also because of like swift and decisive action that was done a while back. So the reason why Canada is so good for crypto is the ML regulations are very good. So in almost all countries in the world, you have before Bitcoin existed, you had anti-money laundering laws and terrorist financing prevention, regulations. The same that would apply to like a currency exchange on your, downtown of your city that the tourists go to. These currency exchanges, they can't just accept like a bag of cash and like cash out, euros for US. They have like limits. They have KYC. They need to record like transactions, and like if there's something suspicious, they need to report it. So there's like already these things that existed, and we got the first whiff of the bit license coming from the US, and we were like, hell no, like that's not going to happen here. So the bit license is like a new law like a new framework just for Bitcoin. So that was like my job, right? So I got hired. I was public affairs director. I went to the Senate. I was doing that, and then we got the government to pass within the budget law, the big yearly law, an amendment that just added virtual currency businesses as a one-line thing almost within the EML framework. And that's really good. That means that, and for the past 4 years, the regulators have been doing back and forth with us, drafting the actual regulation. So it's not even enforced yet. But essentially what that means is like Bitcoin businesses are just like currency exchangers or payment processors. We have like pretty straightforward KYC requirements for like, it's probably going to be either $1,000 a day or $3,000 a day, over which we need to do KYC. Right now, the ATMs are not really doing KYC. They're going to have to do that. So it's pretty relaxed in terms of KYC. Yeah, and in terms of securities regulations, that's another point about tokens, which is hilarious. And there was a tweet by Brendan, the founder of BAT, that I was telling him about Canadian securities regulations, and he was pretending to be a lawyer and he was very wrong on a legal analysis. But these regulations and laws exist regardless of tokens having a specific status, which means that if you are doing an investment contract scheme, you are already covered by existing laws and regulations. There's no need for a token law or token regulations for them to apply. In Canada, this is the case. Like the Canadian Securities, what do you call it? Canadian Securities CSA. It's like the governing body of all the provincial securities regulators. Because in Canada, it's more provincial. They determined that they had like this guideline with 11 use case scenarios. All tokens are securities in Canada. There's no doubt about it whatsoever. They even have specific paragraphs where they talk about SAFT agreements and that stuff, where they're like, it's pretty explicit, but between the lines, it's like whatever complicated Rube Goldberg setup you have with like 4 different steps to your ICO and something, it doesn't matter. Like it's an investment contract.
What do you think of securities laws? Do you agree with them?
That's a really good question. Actually, I'm pretty libertarian. So I actually don't believe in securities laws, and I'm a little bit conflicted because I don't believe in securities laws. I would believe in a stronger jurisdictional system, a stronger tribunal system. I would want it to be easier for private citizens to sue other people privately instead of having overarching regulations. Like I believe in a stronger jurisdiction system than regulation, basically. So philosophically, I'm not a fan of securities laws. But certainly if you look at crypto, even as a libertarian, I can't help but think like the collateral damage is pretty big. I mean, and these people are at their own fault, but at the same time, there's such a huge like cultural, the ICO hype is so like insidious and big. There's a lot of people that are victims of this thing. So it's hard to reconcile.
I guess the question I have for you therefore, or the point I would make, and this isn't meant in any way to trap you, but there could have been people who invested in Bitcoin, say in January, and lost an awful lot of money. And I find one of the contradictions is that you tend to find Bitcoin maximalists and Bitcoiners who are libertarians don't tend to agree with securities accreditation rules because it's restrictive, right? It restricts people from investing. Yet at the same time, when they take issue with a token, they will then use the fact that they've created an unregistered security as an attack vector. Can you see the kind of contradiction I see there?
I don't see the same contradiction. Maybe it's not in my head. Maybe for other people. But I don't really use or want to use. I don't wish the SEC to like crack down on tokens. I think it's definitely going to happen. And one of the things that I'll tell them is like, your lawyers like bullshit like scheme to avoid it. It's meaningless. I'm an advisor to the Ontario Securities Regulator. I was commissioned for fintech. So I mean, these are just objective realities. I'm just kind of telling people what time it is. I don't wish that upon them. However, there's some things like these people have zero skin in the game at all, right? And why am I so like aggro on Twitter? And it's because there is no balance. There's no fairness in any of what they do, because if you look at the perfect example, again, the BAT token, which is to me the worst of the worst of of ICOs, they sell this thing. I don't know if we want to get into that now, but one of the reasons, for example, I'm on Twitter a lot is because generally they feel zero consequence. They have no downside. They only have upside. If their thing goes well, they're billionaires. If their thing goes badly, well, it's, free market, competition, it's innovation. Like we tried this new model, it didn't work out, blah, blah, blah. It's not our money. And generally speaking, that's also not how you create innovation from a tech point of view.
Well, that's fine. So let's get into that. So, and you actually retweeted this. So it's Brave, not Bat. You like Brave. You think it's a good browser. I like Brave. I'm on Brave now. I guess you appreciate what they're trying to do with ad blocking and the change the model for advertising. But the BAT token, I see it as two main issues as well. The first issue is how they ran the ICO. And the secondly is, it's three issues. How they ran the ICO, a non-belief in tokens anyway, and thirdly, the friction that token adds to the user experience within BAT. So let's go one by one. Let's talk about the ICO. It is essentially an unregistered security, but more importantly, you actually called it a Ponzi scheme. So let's talk about the ICO. What were your feelings on that?
I think I would categorize it more as a pyramid scheme because a Ponzi scheme implies that they're giving back money by using other people's money until it runs out, and they're not getting back any money. So it's just a pyramid scheme. I use Ponzi and pyramid interchangeably often, but this is definitely a pyramid scheme since no one is seeing any returns on this. So the first thing I didn't want to focus on BAT at all. And this whole thing started by someone saying, I think it was Hazu, who said something like, I really wish that some of these good products that did ICOs realized their mistake, kind of fix it, and then focus on building good products. And I was like, please let it be Brave. I think that was my tweet. Please let it be Brave. Because Brave was a great example of when Brave was like, we're going to do a browser and we're going to pay out advertisers in Bitcoin. We're going to have a wallet in the browser and like people are going to send micropayments. I was like, wow, this is next level. It's going to be awesome. The inventor of JavaScript is doing this. Wow, that's great. I'm going to look into this. It's like an alternative to, that's great. I love Brave. And then when they did an ICO, I was like, it's kind of like the Telegram ICO. It's like, it's bullshit ICO. I was like, I hope they're not going to make people use the token in the browser. And obviously, like when they announced it, I read the white paper. I was like, it's like the worst thing. And I just forgot about it. But then I started this like argument with the founder of Brave because I was genuinely saying like, I really hope, I was super genuine in the beginning. I was like, you should really get into Lightning. Like Brave and Lightning is an obvious fit. You can be the first mover in Lightning. You can take Lightning mainstream. You would be super epic and like you would be future proof. Brave is great. Don't waste time on the token. The token was a fuck up, basically, like kind of being nice. Trying to like, it's not too late. You can get back into Bitcoin. And then he just went full aggro on me. So I was like, okay, I'll look into the terms. I'll look into this. I've done this many times before to look at terms and conditions of these things. And like, it was so bad, so very, very bad that the legal, like that is a scam, like a massive scam. Like the first thing that I noticed was that if you look at, so everything's on the FAQ page, right? But the FAQ page is like really hard to read and you need to like click on each question to unscroll it. And it's like, nobody reads that. But it's actually in the sales tax exemption. If you look at that paragraph and then within it, it says the GST implication and it says, Brave does not believe the voluntary contributions, so that's what it is, are subject to GST on the basis that they represent pure donations and are not linked to any benefits being derived by the voluntary contribution. So it is legally a donation. You're donating your funds for nothing in return. Like that's the legal setup. And they actually got 30 million in 30 seconds or something. That was like 35 million in 30 seconds. So, it's like, are we supposed to believe that people donated $35 million in 30 seconds expecting nothing in return? Of course not. I had talked about this specific issue at the Ontario Securities Commission during one of our fintech advisory committees. And then I called it the ICO wink. And I told them about the ICO wink, 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 which is, it's a donation, air quote, wink, wink. everybody knows the game, right? Everybody looks at the disclaimer on the white paper and they're like, they just, they gotta do some legal shenanigans, whatever. Everybody knows it's bullshit. Like, it's not a donation. You're buying it to like sell it higher and like make tons of money. Like, everybody knows that, right? And then you have another section. Okay, so what does BATS represent? So I'm sending money as a donation, but I'm still getting something. There is a token that I'm getting, an ERC20 that I'm getting. So what does it represent? So they're intended, the utility tokens, the first thing is they're intended for use on the BAT platform. So like their primary purpose to be used on the BAT platform to enable usage and interaction with the platform. So like you need the token, that's what the term say, like you need the token to use the platform. It's a means to obtain, it says the means to obtain the services and enable usage and interaction with the platform if successfully deployed, obviously. And then the next phrase is, the tokens do not represent or confer any ownership right or stake, share, or security, or equivalent right, or any right to receive future revenue share, or IP, or any form of participation in relating to the BAT platform and Brave or its affiliates. They're non-refundable. They're not intended to be a digital currency, security, commodity, or any kind of financial instrument. So that's like super weird.
So what are they?
What are they? Well, I've classified them. I call it it's a new thing. It's amazing. It's called the tokenized tradable donation receipt.
It's pretty cool. Coinbase probably will have a list of those.
TTDR. I'm going to trademark it. So I give money to BAT. I get a token. The token is meant to be used in the platform. And as we saw from Brandon's own mouth, I can't believe he's saying that on Twitter, but it's not used in the platform and it makes no sense to use it. No one's going to use it. And people just use an Uphold wallet and they just get fiat. They don't use it at all. But so it is a donation receipt. You donate, you get the receipt. And then you have this receipt that does nothing, that gives you no right. It has no exposure to Brave whatsoever. You can't really use it at all in the Brave platform. You need to have an Uphold wallet and have your BAT in it. Like, you can't use the ERC20. It's just an internal ledger movement within the backend. Possibly there's a way to like use it without using Uphold. I don't think so right now. And that thing, he sold it for 30 million. And these are really just, again, these are donation receipts. They don't give anything other than prove you donated. That is their legal, that is objective reality. And like, the pool of these donation receipts was worth $800 million. How is that not a scam? It's a massive scam, and it's so big and so brazen. It's a scale which is unbelievable, right?
Let's give them a small benefit of doubt right now. And let's say at the time, the ICO thing, I think people have become a bit more aware of how bad they are, the problems with them, since, there were rumblings at the end of last year in the wider community and certainly this year. But let's give them the benefit of the doubt. They thought at the time, this is a good idea. It's a way of creating some kind of monetary token that can operate within our browser, similar to Bitcoin, but, it's quicker and the fees are low. Let's just give them the benefit of the doubt. What could they do now? So if they were to reject BAT and say, we're not going to use it anymore, what would the implication be for everybody who is a holder of BAT? Because that would be quite detrimental, right? Not to say it isn't the right thing to do, but it would be quite detrimental to anyone holding BAT.
First thing, I don't think we should give them the benefit of the doubt, because it's not okay. It's okay to be wrong, but it's not okay to make decisions with other people's livelihoods and not yourself be exposed to it. So even though they may have truly believed in making everyone rich and successful with that investment, they created a system in which they were isolated from the consequences of their own actions. So that is wrong, even though they didn't want to scam people. Being unethical is not being malicious necessarily, right? So I don't want to give them benefit of the doubt on that. But what could they do now? Which is to say that from a general perspective, why do I call a lot of these people scammers as a heuristic, when they may be accidental scammers, right? When they may have not intended to become central banks and creating money out of thin air, selling vaporware as hopes and dreams, but they may have realized that later, or they may have thought of the R&D first and foremost and not really taking too much time to think about, where the money is coming from. But what can they do now? Well, The first thing they can do, and there are actually people who are specializing in this service, which is how to convert ICOs back into non-ICOs. There's many things that they can do. I had actually suggested a few to them. I don't really remember. I can name a few. First of all, the first thing you can do is you can buy them back. You really want to just buy them back from, they're not used in the platform. Just issue a refund. Basically, you issue these tokens that were meant to be used in your platform, and no one's going to use it. No one's going to buy it. Just you can buy them back. You can allow BAT holders to convert it into shares, which is really, really annoying for everyone. And you need to be an accredited investor, but maybe some people will scoop them up on the market on the secondary exchanges and for conversion in BAT shares. You can decide to issue dividends. Basically, you can issue dividends on transactions in Bitcoin to BAT holders. You can say, whoever's a BAT holder, can use some crypto scheme or whatever. We'll send you Bitcoins to your BAT addresses. We'll give you some exposure. There's a few things they can do, but it's kind of like taxi medallions, right? Like cities have issued these taxi medallions, and now you have Uber, and they're like, oh shit, what do we do with it? You buy them back, you make them useless, or you just go bankrupt or something. Like the BAT holders are not going to see anything, and Brave doesn't owe anything to the BAT holders anyway. BAT holders just got completely screwed. Like they have nothing at all. So I'm not even. What can Brave do? Well, I don't know, say sorry, try to pay people back, make amends, work really, really hard, not use BAT in the platform, just make it something else.
Well, let's talk about that as well, because I used to work in the digital advertising space, and I'm aware of the problems with the market, how it is completely and utterly broken. So I admire what they're trying to do, and I fully support it. And I've had a play with BAT. I signed up. I'm a content creator, right? Mm-hmm. So maybe I can get some tokens issued to me, and in using it I have sympathized with part of what Brendan says and part of what you said. So the first thing I sympathize with Brendan is, whilst Bitcoin would be great, it would be awesome, the majority of the large publishers who may use the platform will not want Bitcoin, will not want that extra layer of friction. But I do see how users on the front end may want it. So we have a website in the UK, it might be a global site actually, it's something called Quidco. It's a cashback website. So if you go on, if you buy a holiday or book a hotel room, if they're part of the cashback site, you get a little bit of money back. It's quite funny. I reckon I get around £1,500 a year back just by using it. Pays for a holiday kind of once a year. And it's great, and I just get this little total that keeps ticking over. So I kind of imagine me as a user wants advertising blocked, but would have an option to say, I will allow these kind of adverts using this data, and having just a little thing in the browser that shows me an amount of money totaling up. But also, that would be kind of cool if I could accept it in Bitcoin. One or the other. Both totally work for me. I think then on the back end, most likely large publishers will just want being paid in pounds, or dollars, which is absolutely fine. Do you have a belief they should just do the whole thing in Bitcoin?
One first thing I want to just say is, like, I agree with you that what Brave is trying to do is great as a browser, as a company, as a platform. The first thing is, when we talk about these coins, it's easy to get lost in talking about how good the platform is and the features and the problem that it's trying to solve, because these are two completely irrelevant and separate things. You can criticize the use of a token in a platform, and the platform can be absolutely great. The token can be a total and utter scam and a fraud, and the platform can still be awesome, right? So one of the things that angers me is exactly this. Forget the fact that this is a massive scam because they're really disrupting the industry, and it's really neat what they're doing. So a browser like Brave, like the problem that they're solving is micropayments, right? That's the problem that they're trying to solve. It doesn't really, it's not a huge like fundamental difference whether the payment is between advertisers and content creators and users. Like ultimately what they're trying to do is to make people pay for content and or get paid for certain things and get paid for some exposure and track clicks or whatever, track usage of a platform, track impressions on an ad, and pay people accordingly. So there's two things they can do. The first thing is they can use Bitcoin directly for micropayments. That's really neat. The second thing they can do is, like pretty much any other app, they can just allow people to fund an e-wallet, which is in the browser, and it can be denominated in Bitcoins. but it can also be denominated in dollars, right? So why not just have, for example, an e-wallet in BAT, where when you are a user or someone and you're getting paid to see some ads, or you're getting paid for whatever, you just accumulate like a small USD balance, right? So $1, $2, $3, $4, $5.
A bit like what earn.com does.
Yeah, kind of. And then once you're like, all right, I have $5 worth of Bitcoin, I'll withdraw it. You click withdraw, and you just give your Bitcoin address, and they just convert it to Bitcoin and they send it to you. Or if you say, you know what, I don't mind holding it directly as a Bitcoin balance. Well, you have your own wallet in the browser. It can be a client-side wallet that's in the browser. It's unsafe, but for small amounts. And then you withdraw it from your online wallet to Bitcoins, right? So they're not using decentralized servers. They don't need consensus algorithms. There's no complicated things. All they needed to do was have a streamlined payment method within their system. Like the token doesn't take care of tracking royalties or anything. That's software. That's business logic. You don't need Ethereum to do that. You don't need any blockchain technology to do that. Like the blockchain technology in this case is the payment. It's the payment aspect. So just use Bitcoin. And if you're not going to use Bitcoin, just use a centralized kind of database system. I mean, it's not hard. You got a Brave account, you got user balances. If you don't want people to have accounts, as far as I'm concerned, you can use a fiat coin. Why not? I'm not a huge fan of fiat coins. I think it's a lot easier to just have centralized balance sheets for that. I don't really, but if you don't want to have a centralized balance sheet, use a fiat coin wallet that's pegged to US dollar. I think the worst UX possible is to have this volatile kind of penny stock nobody wants that. Like that just kills the user experience.
You did say there could be an advocate of, say, Lightning, but do you not believe that it's probably a bit risky to start working with Lightning just yet? Because it is essentially still in beta, right?
Well, Ethereum is massively riskier. I mean, a lot of people say like Lightning is not ready. And who's using IOTA, right? Who's using EOS in production? Who's using these things for real? Like none of these blockchains are production ready things. Like the only production ready thing in blockchain is Bitcoin, right? So Bitcoin is production ready. Bitcoin works, doesn't fail. It's good software. It's a good system. It can sustain like, $1 trillion economy. Lightning is as good as it gets in terms of blockchain, to be perfectly honest. You look at all the things that are using. Well, no one's using Ethereum. Like everyone's using Ethereum tokens, right? Not a lot of projects are built on Ethereum that have users. But if you look at Lightning Network, it's definitely much, much, much more production ready than the BAT token, right? Or the BAT or the Ethereum token. So I don't buy that argument whatsoever. And these are supposed to be like disrupting companies on the bleeding edge. And they're like, oh, well, Lightning is not ready. Well, you know what? Lightning becomes ready when companies like you integrate it and play around with it and figure out how they want to use it with their users. That's how this thing works. It's not like you're just waiting for shipment, like the Lightning box that you're going to put in your business. If you're gonna be an innovator in this space, you build the systems that you need, that you want to use in your platform. And it's not an excuse. Like Lightning does work. People can use it now. Is it good? No, it's not good. It's hard. You need to have a Lightning node. You need to be online. I mean, the UX has to be developed, but that's the same thing for all the other coins and all the other systems out there. So I don't buy that argument.
Next up, I talked to Francis more about tokens, the BAT token, and why Coinbase isn't great for Bitcoin. But before that, I have a message from my show sponsor. Need to make a payment but don't want to sell off your crypto? BlockFi can help. BlockFi is the leading crypto to USD lender in the US, servicing over 45 states. Use your crypto to do things like buy a car, pay off your credit card, or even pay your taxes. There's no need to buy tokens or pay a membership fee to get started. You can visit blockfi.com/whatbitcoindid to learn more about using your crypto without selling. They have a special offer for the listeners of my podcast. If you sign up at blockfi.com/whatbitcoindid, you can get $25 in free crypto added to customer collateral loans under $10,000, or $50 in free crypto added to customer collateral loans over $10,000, and applying takes less than 2 minutes. So it sounds to me, realistically, the best option for them right now would have been to just have people use their credit cards to make donations, similar to like Patreon, really. That probably seems like a much more sensible route for them. And if they did want to do anything with crypto, then probably Bitcoin would have been the best option.
Yeah, that's what I would say. And it depends what they want to do. Like, one of the ways they could have done it is either they themselves are like holding people's balances, exactly like Patreon. They could have had browser plugins where you have like third-party e-wallets that, like, let's say you have a Venmo account or Coinbase account or a PayPal account. You can link that to your browser to make those payments. They could have just gone the traditional route. Instead of competing with Google, they are competing with Google and Bitcoin at the same time. So they're tackling like the giant of internet browsing and the giant of, new money at the same time.
So the strange thing is then, we seem to have, I say we, but the crypto space, I say, seems to have built this multi-billion-dollar industry based on what is essentially a scam, which are all tokens are scams. They're all completely and utterly useless, and there's no reason to own any of them. Yet we seem to have a number of funds, quite prominent funds, who are investing in tokens, who are backed by quite prominent traditional tech investment funds, and with quite prominent people running those funds talking about them publicly. Yet these people are going to have to rely on likely retail adoption of these tokens for them to be able to realize their investment. How do you think we've got to this point?
That's a really good question. And I think you're raising like a big point about the moral hazard also here. Because at this point, people have such heavy bags, right? Have such a stake in this industry that they don't really have an exit. Like the show has to go on in the crypto industry, right? It's not like everybody's going to be like, okay, we just, we realized that we made a mistake. People are holding a huge amount of institutional money is holding these cryptocurrencies, and they're desperately trying to find a way to unload it. And the only way to unload it if someone else buys it, and the only way that someone else is going to buy it is that they believe it's going to be worth more. So that's why we see these partnerships, these announcements, these integrations in those companies. A great example of that is today's announcement of Stellar.
I saw that.
Blockchain Info just announced that we're going to give away $125 million worth of Stellar. I mean, at this point, like, I don't even want to think about that. Like, I'm just so disgusted by that. Like, why would they give $120 million worth of this Ripple fork that is completely useless? Like, you look, Stellar is another one of these completely useless tokens. And I mean, clearly for me, I see it, let's stimulate the retail economy so we can gradually offload our huge bags. I mean, that's the only explanation. So how did we get here? That's for probably a sociology master's degree or PhD thesis. But there's many things. One of the first, I think, elements was the idea that blockchain is the technology behind Bitcoin. I trace a lot of this hysteria and this how do you want to call it, this bubble, to this particular The Economist article, which had this like a Bitcoin kind of wheel and like a chain, like a bike setup, and it was like blockchain, the technology behind Bitcoin. And fundamentally, it's such a catchy phrase that people instantly created a whole frame of thinking around it, which was Bitcoin is this thing, but there is under the Bitcoin thing that is not socially acceptable to discuss, and that I risk losing my job over if I integrate that in my company or something. There is this other thing, which is the core of Bitcoin, but which can be repurposed for something else, which is blockchain technology. And the reality of blockchain is that it is Bitcoin that is the technology behind blockchain. I was a blockchain consultant for a year and a half, in partnership with like a firm like Deloitte, which is Grant Thornton, in partnership with Grant Thornton. I did blockchain consulting for a long time. And one of the things that I was trying to tell people is the blockchain is not a technology. The blockchain is an actual thing. You download it on your computer. It's a folder, and in the folder you have blocks, and it's the output of something. It's a physical, tangible thing. It's not a technology. And how is the blockchain produced? Well, the blockchain is produced with game theory, with proof of work, with the Nakamoto consensus, with this spontaneous order and emergence and this economic incentive. Like, So these are the technologies behind the blockchain. So the first thing was, creating this idea that blockchain technology was a thing, and it's not. Blockchain technology does not exist. It's an abstract term. It's just a collection of some pretty traditional crypto stuff that are whipped up in an open source project using some kind of whatever, like a consensus buzzword system. But blockchain technology does not exist. The second thing is, I don't know how they got so much influence. About 3 months ago, I read for the first time the Fat Protocol theory.
Oh, by Joel Monegro.
I don't know who wrote that.
Yeah, it was Joel Monegro at Union Square Ventures.
Yeah, so I read that, and it, like the most ridiculous thing I had ever read and I was like, is this really what and I was asking around to other people that are interested in, that are more, I study the altcoin investment space. I don't try to stay as far away as I can, as possible from altcoins, like in my actual trading life and stuff. So I was like, do people actually believe this theory? And it was like, oh yeah, this is like the number one theory in the investment space right now. it's the Fat Protocol theory, like a year and a half ago or something.
Yeah, I think it's been debunked now, widely debunked now, because it was based on the model of you would have been better off investing in Bitcoin than in Coinbase. But I don't think that extrapolates across the rest of the crypto space. So I think that's widely been debunked now as a thesis. But you know what? It did exist. We also had Chris Bonetsky's book on token economics. So there's a lot of that stuff out there. And actually, I don't blame Chris. I think he tried and honestly wrote a book which he believed had value. I do wonder, I would love to talk to him about it now and see how he feels about it. And interestingly, also, one tweet I put out myself recently is that I believe a number of these funds can turn a profit while at the same time the projects they've invested in have failed. Yeah. And yeah, for sure. And but these funds also, so when you say it's been debunked, I mean, it's been debunked within the elite circles of thinkers that are studying this thing. Like, it's been debunked within a circle of maybe like a few thousand people, right? That are like crypto analysts or whatever enthusiasts, maybe 10,000 people. But a huge investment fund that takes a position in like the top 30 cryptos, they can't turn around, like, because the theory's been debunked. And then once that was one of the many theories. And I'm like, a lot of these analysts, to be fair, I am doing the same thing with Bitcoin. It's like nothing happens. Like, okay, so we were wrong about Fat Protocols, which was essentially, and you're correct in saying that they extrapolated Bitcoin onto something else, because that's the best sales pitch you could ever do to sell your stuff. It's like, it's going to be like Bitcoin, right? It's like Bitcoin, but this time you're not missing out because, you miss out on Bitcoin, but you're not going to miss out on this. And the theory was that these protocols, unlike everything we've ever seen in history in terms of protocols, the value is going to be not in the apps and the businesses, but in the protocol itself. Like, the protocol itself has the value. But Bitcoin, the protocol, is a very, very niche communications protocol for money, for currency, right? To be a unit of account and store of value. So you're not investing in a protocol when you're investing in Bitcoin. You're investing in sound money, like in a scarce digital asset. It's not like HTTP or TCP/IP. And the theory was, okay, so these other protocols that allow us to do decentralized computing or smart contracts, they're going to be the same thing as Bitcoin. The value is within the protocol, not the apps. No, like, you're investing in these things as if you're investing in Bitcoin. But when you're investing in Bitcoin, you're investing in sound money. But when you're investing in those other protocols, you're investing in the utility of the apps that are going to be built on it. So it's completely different. Like, it makes no sense to extrapolate the Fat Protocol quote quote aspect of Bitcoin to these other things. And then when they were wrong about Fat Protocols, it became about utility tokens. Eventually it was like, oh wow, like, altcoins are dead. Like, now is the utility token time. And that was probably the biggest brain fart ever, I think, of like any moment in recent history, where everybody was like, so let's go back to pre-civilization, where we have like barter on a large scale, and where we like, let's go back to barter, and then let's also sell those barter things. The mental gymnastics required for people, I don't know exactly how and why this came about, but it seemed to that, because I mean, realistically, there's a reason why people are creating money. It's because, raising funds is hard and finding a business model is difficult. So why do people create money as a funding mechanism?
is because the only other option is that they're going to charge transaction fees in their system. And there's no other way. Either if you want to create a decentralized system and you need to bootstrap it, people need to get paid. And people need to get paid because someone else is paying, right? I mean, the money is going from point A to point B. You can't just, when you're creating money out of thin air, you're not creating money for yourself. You're getting Bitcoins. You're selling air to someone. You are getting Bitcoins. You're not creating money. You're selling stuff and getting money, real money.
Do you know what the sad thing is, though? Because you say people feel like they've missed out on Bitcoin. And I listened to Murad's interview with Pomp the other day. A great interview, Bitcoin one. I'm not sure if you might not have heard it, but you need to listen to it. And the reality is with Bitcoin, it's very unlikely that the value of Bitcoin will stay around where it is. It's either going to go a lot lower because there are difficulties in rolling out and growing the big Bitcoin ecosystem across the world, or it's successful and therefore the price will go a lot higher. I just think the unit price kind of scares people off, but actually I think it's still a worthy investment as part of a portfolio over a long-term trajectory, because in 10 years it could be worth materially a lot more.
Yeah, and people got it wrong. I think the most dangerous words in the crypto investing space is utility drives value. I think this is totally a wrong way to look at these crypto assets and Bitcoin specifically. What drives the value of Bitcoin is its scarcity, and utility is merely a precondition to having value. It's not, if you have like a palm tree, it has a lot of utility. You can do a lot of stuff with a palm tree, but it doesn't have value because creating a palm tree is not hard. You just take the coconut on the ground and you plant it next to it, and you get another palm tree. So the idea that utility drives value, like Vinny Liggum, for example, with his Civic token, like I think it's fundamentally wrong. So why is Bitcoin scarce? And that's another topic. Like a lot of people will say, oh, well, Stellar is scarce, right? Or EOS is scarce. There is a limited amount of it out there. There's a monetary policy. But Bitcoin is not scarce because Satoshi put the limit at 21 million and he created the inflation schedule. Bitcoin is scarce because the properties that make Bitcoin valuable are not from the code, okay? So that's what people don't get with coins. And that's why I like my analogy of the wolf and the Pokemon cards is like people they look at coins like they're Pokemon cards. They have these specs on it and they compare these imaginary specs and they trade on them, right? But the specs of a money, of a cryptocurrency do not come from the code. And if you look at like Ethereum and Bitcoin are really good examples. Like, okay, so what makes Bitcoin really, truly unique? And I believe there are like three main things that make Bitcoin unique. One is censorship resistance, which is Bitcoin is decentralized and the infrastructure is set up in such a way that it is impossible to realistically stop Bitcoin from working, stop Bitcoin transactions from taking place, stop people from downloading and using Bitcoin core nodes and transacting and all that kind of stuff. And censorship resistant is not like a feature in the code, right? It's the way that it's a mentality of the people that build the tools that users are using. It's the mentality of the people that are running the businesses and the influencers out there. And it's the way that the system was designed, and it's the cypherpunk ethos and all of that. So Bitcoin resists censorship, and it's realistically the only one. Like the closest one, that's decentralized is Ethereum. And as we've seen, it is not censorship resistant in a few ways, because if you want to use Ethereum, you have to go through consensus. At this point, you have to go to Infuria, realistically, to use Ethereum nodes and a few Ethereum companies. Bitcoin has trustless validation, which means that it is possible from end to end for users to use it in real life and not trust any third party whatsoever, which is, one of the prerequisites, I guess, for censorship resistance. So just like you cannot know that you received an Ethereum payment because you can't run an Ethereum node, you can with Bitcoin, and you can, audit the whole trail from A to Z, and it's immutable as well, which is a core Bitcoin feature. There's other features like the system is anti-fragile, right? The system, if there's a bug in Bitcoin, if there's like a big exchange that crashes, then multi-sig and these hardware wallets become popular. It's evolving, and these are not code specs, so you cannot fork that. So where do they come from? Well, they come from emergent order, spontaneous order, grassroots, these overlapping network effects that are kind of bootstrapped over time. It comes from this kind of level of adoption. It comes from having people with skin in the. Why is Bitcoin like immutable and censorship resistant, and like why do people trust that the monetary policy or that the rules won't be changed? It's because of things like UASF, things like Segue 2X, because of participant direct action by people that are strongly committed to it. And that's something that you can't reproduce. So, when you look at for example, Ripple, like why is Ripple worthless, even though the technology is great? Well, because Ripple is an open source software project. And the consensus, the security, all the features of Ripple is just a unique node list, which is sponsored by Ripple. Like if you want to create Ripple 2, you just fork Ripple, you create your new unique node list, and you get the exact same properties, the exact same features. So if you can reproduce the features of your coin at no cost, then it doesn't matter if the limit of coins within one blockchain is scarce, because you can have multiple other blockchains that do the same thing. And in Bitcoin, that's the main difference, is that it's scarce, not because there's 21 million. It's because in order to get the same thing, you need to reproduce the entire kind of history and work of Bitcoin. That's why Dogecoin has no value. That's why Bcash has no value. So utility doesn't drive value. Utility is a mere prerequisite, because if it has value, people will want to create more. And if people create more, they will drop the value, and it will eventually tend towards zero. And the reason why these coins are not going into zero right now is because no one's actually using them. There's no competition at all. These are just laboratory experiments that are hermetic. If there was an actual demand for Brave-like browsers with micropayments, you can be absolutely certain that the first one that would create a Brave clone, which has like fiat wallets and Bitcoin Lightning Network transactions in it, exactly the same as Brave, would capture the market share, because it would have one less friction. Then like the equivalent product would have one less friction, which is don't need to switch through this bad token, and you don't need to use Uphold, right? So if there was actual competition, that extra friction would make it lose. So that's like the philosophy of these coins is they're not scarce. Like whatever you're investing in is not scarce. Anybody can reproduce it. It doesn't have any upside. And ultimately, Bitcoin maximalism is a practical view of the world, but it also has an ethical component as well. And if I can kind of like end my thoughts on coins and tokens on that versus Bitcoin, it is that, because I spent way too much time thinking about tokens today. I think I'm gonna not think about tokens for 2 weeks now. I'm joking, but so to kind of wrap it up on the ethical side, why is Bitcoin not a pyramid scheme? Like, why is Bitcoin not a pyramid? Like, I started to think about that. I think maybe after my BAT comments, where I called it a pyramid, and then I start calling everything a pyramid, and then fiat's also a pyramid. And then I had this one night I was walking home and I was like, why is Bitcoin not a pyramid? Because realistically, like the regression theorem value theory of Bitcoin by Ludwig von Mises, like the value of money, is that the value of a currency now is the expected purchasing power of the holder in the future relative to its time preference. So the reason why I value Bitcoin at a certain price today, because there's no goods and service backing it, is because of the purchasing power that I'm expecting to have later, right? In relation to how much I want the money now. So I would much rather have more purchasing power in the future, and I believe it will have more purchasing power in the future. So that's why I value it. So if you think about purchasing power, well, it only has value because I'm going to dump it on someone else. So am I not as bad as the other people? We know that bad has no value other than the fact that you might sell it more for the future for someone else. So isn't that the same thing with Bitcoin? That's a question that I kind of, it kind of bugged me, because I was like, wow, do I have a logical inconsistency here? And my conclusion is kind of radical and weird. And it is that, well, yes, as a forex broker, like I'm a professional forex broker, currency exchanger. Like I make money off of arbitrage spreads. Like that's what I do, and it is an absolute zero sum game. There is absolutely no value that is created from a forex trade. There's only value that's destroyed because it is a zero sum game, and there is rent extraction. And maybe I'll just for the 30-second trading lesson. When someone sells a currency to someone else in a trade, someone's losing. It is an absolute zero sum game. Like there's absolutely no way that this trade is going to be mutually beneficial in terms of purchasing power, right? Because if you're, for example, selling Bitcoin for dollars and the price of Bitcoin goes up, one person loses, right, on the purchasing power. If the other person same thing for the other person on the other side if something else happens. So it's not like mutually beneficial trade. And what I kind of started to think about was, well, these coins only have value when they're actually sold for Bitcoin. Like people sell these altcoins for Bitcoin, or they sell these altcoins for fiat. They don't dump, like nobody buys gas right now, like Ether, right? Nobody buys Ether because they're like, oh, I'm probably going to want to spend like 150 gas a month in 5 years when I'm running my smart car on Ethereum. So I'm gonna pre-buy some Ethereum gas now, so that when I need to use it in the future, I'll be able to have I'll have bought gas cheaper. Nobody thinks that, right? Everybody's like, oh, I'll buy Ether now so that someone else that's using gas in the future will buy it off of me because it's rare. Whereas Bitcoin holders, they're like, I'm going to buy Bitcoin now because I want to buy Bitcoin for myself in the future. And they're cheaper now, right? Not because I'll sell them necessarily for someone else in the future, but a lot of Bitcoin holders will be like, well, I'll buy Bitcoins now because I'll be able to get more Bitcoins from my dollar now. Then I'll be able to hold Bitcoins in the future for money. And I came to realize that, well, yes, money is difficult to be ethical. It's really hard to do ethical money. It's like ethical money is like a miracle. It's really, really hard. And if Bitcoin becomes the only currency that's left, there is no zero-sum game trade from Forex. There is no person with moral hazard that's making money from Forex trade and from issuing these currencies and selling them out of thin air, because you're not dumping Bitcoins on someone else. You're using your purchasing power. And that is within a transaction where both are getting some value. If you are buying, paying your rent with Bitcoin and the person's taking Bitcoin, it is mutually beneficial because you value your apartment more than you value your Bitcoin, and vice versa for him. That's a good ethical trade. So if there is only one currency and you can't dump it on other people, then it is not a pyramid scheme. It stops becoming a pyramid scheme when there is only one, when you can't dump it on a loser, right? So that's kind of like where I see kind of like an ethical component to it, which is not only is it impractical to go back to pre-civilization barter, but it's also ethical, I think, to try to not resist the idea that a single currency will dominate because it has good effects. It removes these weird Forex market and money printing urges. You know what I mean? There's like this component of ethics that I think is like not to be discounted. That's why Bitcoin maximalism is not just an observation. And I think it's kind of also a prescription in the way that I see it. And like, we should aim towards that. And the way that I see natural selection and evolution, today we are protecting the weak with weak DNA. We're caring for humans that in the wild, for example, like 10,000 years ago would die really quickly because we've already, as a species, reached our apex point. We don't need the externalities, the collateral damage of evolution anymore because we have medicine. So we can take care of the weak, and it doesn't matter if we have bad DNA and like bad genes and like the bad genes are getting filtered out. It's fine. We've reached this apex point. That's the same reason why we should conserve animal species, right? So we now control the environment. We have the possibility. There's no reason for the dodo to be extinct. We don't want, bird species to evolve these climatic conditions that are changing. There's no reason. We can conserve animals. With currencies, it's different. Like we've already figured it out with gold that, there are certain properties and that money is a protocol and that eventually it all gravitates to one, and the one that people gravitate to, is the one that's the hardest to reproduce, and it has some features in it, and it's the one that's most easy to trustlessly validate. So we've already figured out in the concept of currency competition, I think historically, that it leads to one and it has certain properties. So I don't see any reason why we should, stand by with the collateral damage of currency competition, and just for the sake of experimentation, having these currencies collide into battle to the death and only one emerge. I don't see that as necessary. So when I talk about altcoins, people are free to do whatever they want. I just think that we don't need to go through this period of currency competition, which inevitably is going to anyway lead to one winner. But what people don't see is the collateral damage. So yeah, I just don't think that we need this collateral damage, and I would rather not see it and, talk about it on Twitter. I have nothing against people who are in this industry, but it is, objectively a huge net negative for humanity to have to go through this huge period of people losing their wealth.
Wow. Okay. Whilst that feels like a good ending point, I do have one last thing I want to talk to you about. So my December 16, I needed to buy some Bitcoin for something I needed to buy online for my mother, and I found Coinbase. I didn't know it before then, and I thought it was a wonderful experience. I thought it was really good. Yes, it might have been a bit more expensive. Yes, it's not local Bitcoins, but at the time, for somebody like me with little experience, little tech experience, it was a great experience for buying the Bitcoin, making the transfer. And I've always been a big proponent of Coinbase. I've always said to people, get an account, try it out, buy £50 worth. I used to say, just hold on to it. And yet recently I'm becoming increasingly concerned with them as a business, with some of the things they're doing. Most recently today, Hasu, by the way, who creates some of the best content I've read in the Bitcoin and crypto space, he noted that the trading pair for BAT, the only trading pair, is USDC coin. I'm trying to remember the name. It's the token. It's the stable coin. You can't actually. They haven't got a trading pair with Bitcoin, and I'm starting to feel like these stable coins are an attack on Bitcoin, and that Coinbase and Brian Armstrong potentially are working against Bitcoin. Do you have any thoughts on that?
Yeah, I have a lot of thoughts on that. I am a particularly, I think, vocal person talking about Coinbase, BitPay, and blockchain info, which is kind of the trio that I put in kind of a similar basket, which are the original Bitcoin companies that kind of went sour over time. I think Coinbase used to be a really good kind of product and company that a lot of us were proud to recommend. Same thing with BitPay. Blockchain info, I think it didn't take a long time for a lot of people to realize that it was a bad product. Probably like around 2014, people had already realized that they were like just a bad product for Bitcoin. But yeah, I'm not at all a fan of what they're doing. I think they're doing a lot of bad things, and I think the bad things that they're doing I think the good things they did in the past don't necessarily make up for the bad things that they're doing. What they're doing with BAT and listing these coins one after the other is the way that I see it is kind of like boiler room, because they are pumping these coins. They're not just listing them. Like Coinbase is the driving force behind the token economy, behind the ERC20 economy, behind this idea of tokenize everything, of all these the multi-coin ideologies, like the Coinbase ideology, right? I don't think that Coinbase initially started out necessarily as a Bitcoin company. I think they were more like a startup, like a fintech startup that got into Bitcoin. That Bitcoin was like a great kind of platform for them when they launched, but they're not Bitcoiners. Like I don't think Coinbase is a Bitcoin company. I think it's a fintech company that used Bitcoin to launch itself, like a lot of the others from Silicon Valley. And no, I don't think at all they have Bitcoin's best interest at heart. For example, you look at what they did with Bcash, and that might be just like an asinine, or some kind of forgotten thing, but they did some pretty bad stuff with Bcash. Like they listed Bcash at the top. You could buy and not sell it. They created like a 20% Bcash pump. Like, I mean, the whole Bcash listing and people offloading on it was really sketchy. Like it's very, very sketchy stuff. And the fiat coin thing, I think like Coinbase is just going to end up being Venmo. they're repackaging. They're going to end up just repackaging fiat into a new shinier package. And yeah, I don't trust them for 1 cent. I think they're the new bank. Essentially, they're just a new bank, and they're just repackaging, fiat. And yeah, it's a shame, right? But I mean, it was never. They don't have. If you're a company and you don't have like values and commitment, you're not going to be able to stay on the right path. Like, I don't think they had any company values at all, and I think they're just going with what makes the most money. And I think they're going with the peer pressure, the Silicon Valley peer pressure, that Bitcoin is toxic, Bitcoin is not good. What's important is innovation and open community building. But at the same time, they're raking in $1 billion like worth of profits at the same time. So yeah, not a fan at all. And not only that, but they almost destroyed Bitcoin. And a lot of the reason why I'm particularly vocal against blockchain info, Coinbase, Shapeshift, and BitPay is that they actively conspired in closed door meetings, in some of which I was a part of, in pushing a new development team to replace Bitcoin Core. So this was before your time, Peter, in Bitcoin. This was like 2015, 2016 or earlier. And then with SegWit 2x in 2017. So they tried to take over Bitcoin development. They tried to get the Bitcoin Core team removed. They tried to put their own teams. They hired a BitPay guy, Jeff Garzik, with the backing of Coinbase to develop this fork of Bitcoin that they were going to list as being Bitcoin, which ultimately, if they had gotten their way, the only thing that prevented them from doing that was the Bitcoin cypherpunks that are now, the crypto Twitter people, right? This is
Luke Dash Jr.
Yeah, Luke Dash Jr. But like pretty much, a lot of what you see today as Bitcoin maximalists on Twitter, like there's a reason why we all know each other and we're all friends and we all retweet each other, is because we got together and met each other on Twitter fighting Coinbase and fighting blockchain info and fighting BitPay's fork of Bitcoin, which if they had gotten their way, the actual software that they were promoting actually failed, right? So they didn't get their fork passed. We blocked it. But the actual software, when the fork timing happened, it failed. It broke. So Bitcoin would have broken. Bitcoin would have went down because of these guys. So just for that, whatever they do is now completely tinted with, for me, some kind of malice. I'm very, very skeptical of them. And I think that they've lost the support of the Bitcoin community. So they're going to go get support somewhere else. And I'm not sure what their plan is, but I think what they're trying to do now is to loop Bitcoin with the altcoin economy. They're trying to kind of, they need to build up some plausible deniability, I think, legally, for the pumps that they've been doing. The idea of promoting this multi-token economy as this world-changing technological movement that's good for open finance, I think is a great narrative to kind of protect themselves legally, to promote that. So yeah, I'm not a fan. I think that's pretty obvious. And they could have done something really, really great with Bitcoin. They could have really become kind of like this infrastructure for a Bitcoin standard for a transition away from fiat. And now they've just really become just fiat 2.0, right?
Mm. Well, you brought the fire as I expected you would.
Yep. Well, that's the advantage of not having investors or a boss, right?
Yeah. This has been great. It's been really, really good. And I think, we could easily have had a long talk about Bitcoin. And I think we have had a long talk about Bitcoin by talking about tokens.
Absolutely.
By helping people understand tokens, you help people understand Bitcoin more, and you make people realize some of the risks involved in these investments. It's not going to stop people, but I certainly feel like there's a movement away from tokens, or there is enough concern around them that people are questioning whether they should be investing in these. I certainly am. I've been on a very long journey, Francis. If you ever listen to my podcast, I recommend just do one at the start, in the middle, and near the end. You'll see a progression there, because I think it just takes time. One of the things I struggle with sometimes on maximalism, some of the hardcore maximalists, they can be intimidating, and it can. You're required to understand a lot of new concepts very quickly.
Yeah, for sure.
But I think
you're correct.
But something like this is a welcoming way to try and explain to people what maximalism is. It's not a cultist movement. It is about a hard and sound money and about protecting your wealth and your income and your investments. So I think it's been super useful. Just to close out, can you let people know how to get in touch with you, the work you're doing, where they can check it out, and who you would maybe like to hear from?
Yeah, absolutely. And just for viewers, like in 2015, like I think 2014, I have this video on YouTube somewhere. I hope no one ever finds it, where one of my friends was doing an ICO for like a music app, which was on BitShares. And like, I was super happy to promote it. Like when I first got into crypto, I was like a fan, when Andreas Antonopoulos was saying that everybody was going to have a currency for his birthday party and people are going to make currencies everywhere. Yeah, I bought into it. It was cool, right? But you're absolutely correct, Peter, into saying that a lot of the Bitcoin maximalists, they're just kind of exhausted and exasperated, and they're very bitter. They're very dry in their arguments, and it comes off really badly. It comes off like, if you're a new person coming into this space, it comes off like really condescending and arrogant. But really, it is a factor of years and years and years and billions of dollars being kind of wasted everywhere. There's a built-in frustration there from the early adopters. So absolutely, Bitcoin maximalists tend to be dry, but behind it, it's definitely a long reflection. Some of the Bitcoin maximalists that are on Twitter, I've known them for years, and not to vouch for all the Bitcoin maximalists, but a lot of the ones that I know have been thinking about this pretty much constantly for years on end. So yeah, if you find yourself struggling to understand these things, it's perfectly fine. And time and dedication to learning this stuff, everybody has to go through it. There's no escaping it.
Well, maybe it's time to hand the baton on to a second round of newer maximalists to take over the debate and kind of help convince and explain to people these concepts.
Yeah, absolutely. And I think most maximalists are coming up into their 5th and 6th year in Bitcoin, which is definitely, I think, one of the factors leading into these perceived toxicities, that people have been in this for a long time, and it's quite exhausting to be in Bitcoin. So I absolutely welcome people that I got into Bitcoin, 2017. You have a lot of energy, you're green, go out there and preach Bitcoin, because some of the OGs, they need a sabbatical. So where can people find me? Well, I'm only pretty relevant to you. If you're in Canada, you can use my service, bylls.com, to pay your bills. You can buy some Bitcoin using my app, bitcoinoutlet.com. My website is satoshiportal.com. So if you want to know like the projects we're involved in, you can go there. If you are a developer and you want to work on Bitcoin open source projects, we have cyphernode.io, and we're a few collaborators where we're working on open source code. It's really fun, and we're definitely trying to get a few people to build the actual core project, and also to build open source like apps on top of it, like an open source app ecosystem. So definitely check that out. And I have a Medium blog, so you can follow me on Medium if you use Medium. And obviously, I am always a Twitter addict. You can find me at Francis Pouliot _ and I have a Twitter verified mark. So be careful for the giveaways. So I am not giving away anything. Unlike blockchain.info, I'm not making $100 million coin giveaway on Twitter. Yeah, so don't fall for the giveaway scam, please.
Well, this has been amazing. Thank you so much for coming on, Francis. I've really, really enjoyed this, and I look forward to seeing the response from people when it goes out on Friday.
All right. Well, it was a pleasure, Peter, and I'll definitely be watching all of your other podcasts. I really like this interview, so thank you so much for taking the time.
Okay, cool. What did you make of that? Did you enjoy that interview? What do you think of everything Francis has to say about tokens? I certainly think he makes some valid points, especially when you consider the BAT token is considered a donation. I've also tried to use the BAT token via the browser, and I struggled with the user experience. Anyway, I'm going to give them the benefit of the doubt. I like Brendan, I like Brave, I like what they're doing, and I like to see what they're going to do in the future. I don't think BAT will be relevant. I do think they'll probably do some fiat gateway, or they'll just use Bitcoin. I hope they use Bitcoin. I think Bitcoin would be super cool, but I'm going to give them the benefit of the doubt to see what they do. And I also just want to say a massive thank you to Francis for coming on the show. I thought he was, I thought he was really useful. Okay, so if you want to support the show, there's so many things you can do. Firstly, you can consider becoming a patron. I've got a patron page over at patreon.com/whatbitcoindid. I've got 31 now. So cool. I'm so grateful to everyone who does it. So thank you so much. But if you want to support the show, please do go and check that out. You can also become a show sponsor. If you're interested in reaching new audiences, you can email me on hello@whatbitcoindid.com and we can discuss that. Downloads are growing so fast. It was over 80,000 last month. I'm definitely going to crash through 100,000 this month. So yeah, just give me a shout if you want to talk about that. You can leave me a review on iTunes. I've seen how many there are. There's loads. I'm so grateful for everyone who's ever done that here in America, anywhere around the world. Thank you so much. But if you haven't, please do. Leave me a 5-star if you think I deserve it. And also click on the subscribe button because that helps with my rankings. You can follow me on social media. I'm on Instagram. I'm on Medium. I'm on Twitter. My handle on everything is @whatbitcoindid. And if you reach out to me, I will most likely reply to you. You can check out my website, which is www.whatbitcoindid.com. On there, you'll find different ways to navigate the old podcast. You can search by guest. You can go by topic. It's pretty cool. You can sign up to my newsletter. I said I was going to do a daily email and I've totally fallen behind on that. I'm so sorry. I'm really drowning in work. If somebody wants to help me with that, let me know. But you can subscribe to my email on my website. I will be getting back into doing that. And you can share the show out with your friends and family on social media. Okay, thank you to everybody who does support the show. I really appreciate it. I love doing it. I'm coming up to the 1-year anniversary. I'm going to organise a meetup in London, put some money behind the bar to celebrate it. But for everyone who supported the show this year, thank you so much. Okay, I'm going to go now. I hope you all have a great week, and I will see you next week. I've got an absolute spanking interview for Tuesday. Can't wait to get it released. Okay, have a great week.